What's up, everybody? Hope everyone is having an amazing day so far. As always, I'm super grateful. And in today's video, um, we're going to go over a supply and demand methodology called drop base drop, right? So let's get started right into it. So this is a type of entry that you would use for, supply and demand um, setups, right? So as you can see in my book, The Complete Trader here, we have four bases for supply and demand. And the base that I'm going to be talking about today is this drop base drop. So off of this drop base drop right here, you'll see, and it won't always look as clean and pretty as I have it drawn up in this picture, right? Um, but nothing always looks clean and pretty in these markets, right? We just have to train our eyes to see different types of things in the market. So with drop base drop, right, we see that there's a heavy bearish candle to the downside, a bullish base, right, and then another heavy push to the downside. So with that being said, this acts as a supply zone. And in supply zones, you only want to be looking for sells, right? Let me repeat that. In supply zones, in strong supply zones, you only want to be looking for sells, okay? So let's go look over on the charts over here really quick. Now, with this methodology, it can help you understand, not only one, where good potential areas of, selling in supply zones or when to buy in demand zones. Um, but it can also help you with, you know, minimal risk on your entries in those zones. So if we take a look right here, if you guys remember this picture, keep this picture in your head, right? We can see right here in this area, we have something similar, okay? So we have this gray candle that is on a drop. We have this blue candle acting as a base, and then you see this next bearish candle push strongly to the downside, right? So I think we all can agree, and if you don't know this, I guess you are about to know now, but I think we all can agree that 99% of moves in the market are created by big money, by a larger entity, a a entity that has, you know billions of on top of billions of dollars to be able to move this market at a volatile pace like this, right? I think we all can agree on that. So that's something to take into consideration when you look at moves, impulsive moves like this, impulsive moves like this, impulsive moves like that, right? Impulsive moves again like this. So that's something to take into consideration. So when we look at, let's say a higher time frame drop base drop, for price to get back up into that area, right? On the lower time frames, it's going to look like an uptrend, okay? But that's beside the fact, right? That's the smaller picture. We want to look at the larger picture. We want to look at the grand scheme of things, okay? So if we look in this area right here where this drop base drop was, you want to, say that we're only, we only see this, right? We don't see price to the right, okay? So delete everything that you have seen here. Let's say, we see this, we want to mark off that base, right? And we want to notice that there's this inefficiency, right, in between this price action, okay? So, you know, in the process, especially with this setup here, you can see also just below this drop base drop area, there was liquidity being built up, okay? Sell side. Um, so there is probably, retail selling in this area here, and stop losses are just placed above. And then there's also probably breakout traders that have buy stops just sitting above this area. So what happens, right? Why are these setups so key in supply and demand methodology, right? When price gets back up into this area, right, we have now activated and hit all stop losses in this area. You can see right here where this money is, right? There's, relatively equal highs all across the board in this area. And price makes its way up, you can see clearly it didn't stay around very long in this area, just as opposed to over here. It made a quick buy up, leaving buys in the market, and then strong sell side slippage. Strong sell side slippage rolling over to the downside. Okay, so this is just a quick video that you guys can use to watch over and over again. You know, in my book, The Complete Trader, I go over this in depth. And if you guys still don't understand this video, I highly recommend watching my supply and demand series also that I uploaded a while back. Um, so let's continue on real quick because I just now saw something else that we can add on. Just really quick, we're not going to go into detail, but you can see this dropped, for a good 50 plus pip trade. I would say, 30, 40, 50 pips can make you a really, really good living in forex, right? You don't need to hit home runs. You just need consistency in these markets. You don't need to have 100 pips, 200 pips, 300 pips in one trade to be profitable and put food on your table. You really don't. Okay. So get that out of your mind. Here, a quick in and out. Price came up and dipped right back out. But one thing to notice is if you look over here, there's this drop base drop. Now, if we look at this diagram here of a rally base rally right here, right, we can see that it looks, opposite to this, right? They're identical, but just, reverse, right? So you would be looking for buys in a demand zone to go off of this rally base rally. So something interesting in this setup right here, you can see also right here, right? The market hits a turning point around, you know, 1.07300 institutional level and reverses to the upside. But one thing to take into consideration, you can look at this drop base drop here. You can see the same thing right here. Rally, base, rally. So if I marked off a zone right here, maybe that we could anticipate potential buys as well in this area of demand. Okay. So if you guys like this video, give me a like, subscribe. If you don't understand it, watch it a couple times. And also, if you still don't understand it, like I said, I recommend you go and watch my supply and demand series. It's a three-part series where I go even more in depth than this on, all aspects of, supply and demand methodology. So with that being said, I'm going to end it here and hope you guys continue to have a good rest of your day or night, depending on where you're at. And until the next time, I'll catch you guys later. Peace out.